today we are going to be going over order flow. But before we get into that, as you can see, look, we are in a couple of trades on GBP USD. This is my big swing down here. I mean, this is only one of my small accounts that I'm trying to flip into a big account, which I'll probably do for the duration of this year. You see, we're in a swing here. We're like 150 odd pips up, and I just got into a couple of buys here this morning in the Asian session. Just with a standard lot, 2 0.5s. As you can see, it's a live account. Just, I know some people don't believe what we're doing here, but we are live traders. Anyway, let's get into it. So, number one, what is order flow? Now, for us to be able to understand order flow, we need to understand what is the market. So, the market is made up of buyers and sellers. That's it, no more, no less. The market is a constant battle between supply and demand, buying wanting to overpower sellers and vice versa. And a trend occurs obviously when one side, either buyers or sellers, have the upper hand and push price in their desired direction. So, what is order flow? Banks and institutions, they trade with such large volume, right, that they physically cannot fill all of these orders at the same time. So they need to use order flow in order to pick up the rest and fill the remaining orders. For every buyer, there must be a seller, and for every seller, there must be a buyer. This is basic supply and demand knowledge. So the banks and the institutions will they'll flow the price up and down the market in order to fill these orders and continue the trend. So order flow is essentially the banks and institutions moving their money from price to price, right? Order flow like this, okay? Of course, it doesn't always look like as clean as this, but you get the idea. We can see this in real time by understanding and knowing how to read and interpret order flow. So in simple terms, order flow is the moving of money throughout the market. So I just wanted to go over this price action on GBP USD. So I will take us back to about here and delete this. So I'll just quickly draw a quick schematic. So essentially, right, we have market structure, and then within our market structure, right, we have our order flow, and obviously this gives us a break of structure, right? So we've got our order flow, right? And then we'll break structure, right? And then usually what happens for the pullback is the intraday timeframes will shift order flow so that we can pull back, right? And then, mitigate obviously this previous, swing range. Then we will shift order flow again to then obviously continue the trend. So we, want to be obviously catching these trades, pro intraday order flow so that we know that we're on the right side of the market. So now let's head over to the charts and on GBP USD here, right? So essentially, like, let's say this was our previous 4-hour structural leg, right? And, we break structure. Then we give a shift in order flow here to mitigate out of. But essentially, we never pulled back up to the EQ. So yes, like, you can take these trades because, the intraday time frame would have given you a shift in order flow. But ultimately, this more likely is going to be inducement for us to pull all the way back up into the extreme for much better prices so that the banks and institutions can fill these orders and obviously continue that bearish trade, sorry. So you can see, right, that within our structural point, right, we have all of these like ebbs and flows in the market, which this is order flow, right? Now, usually our 4-hour order flow will be our 15M structure. So 4-hour order flow equals 15-minute structure. And like, it doesn't always, but a lot of the time they do match up. And if you do specifically use your 4-hour order flow for your 15-minute structure, you tend to be on the right side of the market more often than the wrong side. So we can obviously use these internal like order flow. I can't delete this. We can obviously use these internal swings in the market to get involved in trades, right? because obviously like the market is bearish. So when we see like a previous range here, we can like get involved in the market on these order flow swings, because we know that this is the banks and institutions filling those orders to continue the trend to take out the weak structural point. So at this point in time, like this trade, oh crikey Moses, what's going on here? Ah, so taking a trade here, for example, you know that it's a good trade because number one, it's pro structure, pro 4 hour structure, and it's also pro 4 hour order flow. So it's a very, very high probability trade when you're trading with order flow and structure. Yes, you can take like trades that are counter structure and pro order flow. For example, like this here would be like our 4 hour or daily swing, and we get a major shift here, and we can obviously take a buy, because it is pro order flow. So, for example, right, let's see here, right, we have a break of structure to the downside in the market here. So, and then we have like a massive impulse here, and people would be thinking, oh, this is like what 200 odd pip, 220 pip 4 hour candle, like the high is definitely going. We're going to see a massive bull run. Potentially yes, but essentially no, because probability would suggest that we've just put in a lower low, so more than likely we're going to see a lower high in the market to continue that trend. So how do we utilize order flow to get into a trade up here? Well, let's just go down to our intraday trading time frame. Now, at this moment in time, we can clearly see that order flow is very definitely bullish, right? And the 15-minute time frame is bullish as well. Now, you see, right, when like we get the shift in order flow, so this is like our 15M like major order flow here, it does just hold, especially when we are pro trend, right? Order flow does continue to hold because this is the banks and institutions facilitating and filling their remaining orders so that they can continue price with the trend. Then all of this is mitigated out of, so there's like no resting orders left here per se, so that price can just blast through it with no resistance, mitigate like an extreme, and then die, basically, right? Now, at this point in time, right, obviously the 15-minute time frame is bullish. As you can see here, we have this break of structure. So we need to wait for order flow to be on our side. So let's just obviously draw our 15-minute order flow, right, as something like this. Then we pull back here and take the high. So for us to be able to get involved in a trade, we need to see a shift in order flow, right? We need to see buyers taken out of the market if we're looking to sell, and we need to see sellers taken out of the market. That's wrong. Sellers taken out of the market if we're looking to buy, right? So let's say, right, people were selling here, we've seen sellers taken out of the market, so now we can take a buy to obviously trade with order flow. So our previous buyers, our last buyers in the market were here. We can see that as obviously we had sellers in the market here, which pushed the price down, and then buyers ultimately had control of the market and were able to take out those sellers. So at this moment in time, we don't want to be selling because buyers have control of the market. So if we just play price on, we can see, okay, sellers have taken control of the market for a short period of time. How do we know this? Because buyers' previous buying range, which is this, has failed. So why is this very high probable trade? Well, one, because 4 hour structure is bearish, and number two, our intraday time frame 15-minute order flow is bearish. Order flow will always shift before structure, right? So obviously at this point, our 15-minute structural low is down here, but our order flow, low is here. So we don't need to wait for that structure to shift because we're pro trend on the 4 hour. So we can wait for intraday time frame order flow to shift. Then we can wait for that pullback so that we can continue and take out the weak structural low. I hope that makes sense. So what happens when we get a shift in order flow? So as you can see here, if I just draw this on, right, this is our shift in order flow. And then, of course, whenever we take out a high or low in the market, what do we get, right? We get a pullback. How does that pullback start? This pullback starts via a shift in order flow, right? So here, right, we take out a low in the market, and obviously we have this previous like small range which gets taken out so that we can then begin the pullback to mitigate out of a supply level to then continue. So you can see as soon as we get that shift in order flow, although it's not advised, you can take, you know, a counter trend buy here because you are pro order flow. And of course, what do we want to see? We want to see buyers taken out of the market for us to get into a sell, right? So this is our last sort of internal buying range. But in this instance, right, and this does happen sometimes, we can see order flow go a little bit messy because, of course, this is a 4-hour move, right? So we need like some form of large manipulation to happen. We need to see the banks and institutions fill orders. And how do they fill orders? Via runs on liquidity. So what do we build here, right? We build equal highs. Yes, we get a shift in order flow here. So potentially you take a sell here, you might take a loss or a break even. But the way you can prevent that is by realizing that in this leg, there's been no liquidation, right? There's been no orders that have been filled. Nobody has been taken out of the market yet. So more than likely, what's going to happen is we're going to see sellers trapped, right? Early sellers, premature sellers in the market are going to be trapped so that the banks and institutions can fill, you know, more of their orders, and then we get like a super hard sell-off, as you can see here, right? So yes, we pull in here and we shift order flow, but if you look at this, right, it's not like as impulsive as obviously this move here, right? It's sort of like corrective in a sense, and then obviously we come up, we liquidate early sellers, and we just die, right? We give that shift in order flow, right, that true shift in order flow after a liquidation, and look, then what happens is essentially we respect that previous run on liquidity here. We pull into that previous order flow range and continue the sell-off. And of course, right, we take out a low. We need to pull back to mitigate out. So order flow shifts, right, to give us that pullback so that then we can obviously continue with the trend and fill those orders. So you see, like, this is literally just manipulation, right? We again build, you know, equal highs here. That obviously the banks and institutions, they need to fill their orders. And how do they fill orders? Via runs on liquidity into unmitigated supply to then obviously continue and push the market. Like we can see, because here is like there's no sort of intent in the market, right? We pull back, we have a hard, fast and aggressive run into supply, which runs previous liquidity, previous orders, then we get an aggressive sell off. This shows us that there's interest in these levels, and there's interest, you know, selling pressure. And then essentially, you know, the order flow just continues, and you know, you might not get into any trades down here because, you know, obviously it is very, very impulsive. But again, right, if you see here, I can use this as a nice example. Again, right, so let me just get this. So this was our current order flow range, right? We pull back here and we create a new order flow range. However, this range doesn't run any liquidity. There's no orders are filled here because there's nobody taken out of the market, right? There's no liquidation. So what happens? Price pulls back, liquidates early sellers, shifts order flow again, and when we can take the sell, right, we shift order flow, internal order flow here, we pull back, we can take a sell, right? Then we give another order flow range here, we can take a sell because obviously we're pro trend trading with order flow. So it's, you get a much better strike rate and hit rate when you're trading with obviously intraday order flow. I hope that makes sense. If there's anything else that you would like me to go over, or you don't understand something fully, drop it in the comments. Hit that like button, hit the subscribe button, and I will catch you on the flip side.